Interesting trading week. Want to go over the trades on the day and the results. Down day to day. We had a big gain yesterday, over 22,000. So we had losses on Monday, Tuesday, and today, and gains on Wednesday, Thursday. And so the sum of the week is up 3,500. Hypotheticals today minus 6,075. Real trading about 57 minus 5,750, and 50K portfolio minus 1,250. And these are not the final numbers. The final numbers come from the statements. These are from the platform, and then the final statements have the. These are estimated, and I usually estimate the number and then round down a little bit. So on the week, 35.95, up on the month, 13.659, and up on the year, 29.509. Again, these are estimated numbers based on rounding down and needing the final statement for verification. And so the end of day drawdown. So yesterday we hit an equity peak, not in real trading, but our portfolio that we were trading. We had some technical errors and some transitions, and so we were not quite in our live trading at equity peaks. This is the old portfolio we were trading, and because it made this worst case drawdown, we rotated over to this portfolio right here, the stock index portfolio 23, removed one strategy, and then changed tick count trend to 1 minute instead of 5 minute. And then you have this worst case drawdown intact, and you still had the run up. And so the live results for this are, like I said, up on the month about 13,659. The results here will be about 20,000. So we transitioned to this portfolio intra-month. The drawdown, we were about $1,600. We had a $1,600 drawdown, still $1,600 away from our equity peaks yesterday, and we hit that about on March the 9th, and then we had a rapid drawdown. We came back almost to equity peaks yesterday, and the portfolios did, but our transition and some of our technical errors, we didn't quite hit that equity peak in live trading yet. So our last equity peak was on February the 21st, and after today's losses, we're at about a $7,300 drawdown from our most recent equity peak on February the 21st. So let's go over the trades on the day. By the way, this portfolio calculator has been uploaded. This is through yesterday, March the 16th. Try to have the March 17th updated. So choppy day. Thought there'd be more decisive price action after yesterday's rally. The most interesting news is the Fed's balance sheet. The Fed's balance sheet went up by $300 billion this week, and this is information that is sent out once a week. We only get this information once a week. They're kind of secretive, and I think it ought to be with the Fed that we have that's as active as we have. We ought to have a more real-time information, daily or even live intraday notifications if we're going to have such an active Fed. That's my opinion. And so for them to just increase the balance sheet and us find out later doesn't seem right. We ought to know. And so here is the big picture of the Fed's balance sheet. Before the financial crisis, it used to be less than $1 trillion. And by the time we hit the pandemic, we were at $3.7 trillion in September of 2019. And then it went up to almost $9 trillion after the pandemic, and then we had inflation, and so the Fed was in the process of reducing their balance sheet. They hadn't reduced it much, and then boom, it's popped up again. Be interesting to export this data. I think you can download it here and import it into TradeStation and see what happens after the Fed increases their balance sheet. You know, you can't find a lot of data points where you're going to say what happens when the Fed increases its balance sheet by $300 billion. That doesn't happen frequently, and so be interesting to see. At some point, you know, we go through these periods of time where the market sells off, and then something bad happens, and the Fed comes in and rescues the market, reduces interest rates, expands their balance sheet, and at some point this will stop working and eventually roll over. And you know, it'll work until it doesn't, but it's a little scary to continue to do this and go down this road. The reason I say all this is technically this makes it harder to short the market, and it creates this prop-up effect we've had. And so even though the Fed's balance sheet was reduced during this time period, it has still been hard to short the market harder to short the market because they haven't reduced it very quickly, and there's been an anticipation that they would pivot on interest rates and on their balance sheet. And so there's a side of Wall Street that wants this to go on because it makes their assets go up, and there's a disregard by some for the inflationary effects of this. But that is the main thing we want to know here, is that it is difficult to have a two-sided market. It's biased to the upside in stocks and assets in general. So that's why I go into detail over the Fed's balance sheet. So on a day like today, we get a little bit of a down day, and it's just nothing but chop, and continue to look for strategies to trade. On choppy days, we had a kind of a trendy morning. It was kind of a stop run on the S&P. You see stop run. We had Cobra 3, bam, stops out the short side, and then it sells off. And then on mirror, boom, hits that stop loss and then surges. And so these kind of things happen in trading, and they can be frustrating. But in general, mirror did not hit it. Has a profit target above this price, and so it would have rolled over again anyway. And so in the short term, it's annoying. But the Cobra 3 one is more of a stop run because the market never returned to that price. It went straight there and then rolled over. Sometimes you get economic data that comes out. The leading economic indicators, I think, came out at that time. Momentum reversal, not a bad trade, just no follow through to the upside. I thought the market would sell off today, give some of that back, or rally, but when it started to sell off, I thought, it's going to continue to sell off, and then it started to chop, and it just looks like a normal pullback, poised to rally again. And I thought it might rally at the end of the day. It did not. Tick Wave had the trade of the day, plus 1325. Taking the short trade, not getting stopped out on that spike up on leading economic indicators. Opening chop was good. We had some automation errors. That's why we did better. Some double orders. I'm not sure why I'm getting some double orders on opening chop to throw off my results. And so had the nice long trade, had the short trade, and then got the long trade that was stopped out. And so this was up on the day, though. Opening chop was up 825. Tick chop was down minus 825. And we had this opening chop did not trade. Count trend dynamic turnaround. I had a short trade. See, here's the stop running that I'm talking about, or the short fighting. Short, fought back, short, hit the profit target. Just won't go down on short trades with that Fed balance sheet. Bloated the way it is, providing support to the market and assets in general. And Viper, here it is. You're short the market, and it acts like it's going to roll over. Bam, it hits that and then sells off. And so it hits that again. It just it's difficult to short. The market continues to poise for a short trade and then spikes instead. Tick count trend, the same thing. Got this short, but tried to short it here, spiked, sold off. Tried to short it here, spiked, and then sold off. Shorted it on that spike, and then shorted it on this rally, and then it spiked again. And so challenging price action. Tick reversal, down on the day. We traded this one, minus 725. We did not trade this version, which was up 240. And momentum reversal. EVP1 caught a little trade at the end of the day. Thought the market might rally a little more. Plus 295, momentum reversal. This was stopped out. A lot of stop run price action today, where the market just reverses on our orders. So stopped out, and then it rallies. Got back in. A little bit of a gain on that trade, but down on the day. Robot. We had a technical error with Robot. What I see here is the closing price is 12,708.25, but when you refresh this, it goes to 12,712. So Robot should not have signaled a trade, and so I saw that on one platform, and on another platform it did not. And so work on removing the .d and using the custom session with the non.d data. And so you have to take into consideration the holiday effect of that, because the .d doesn't show the holidays, while the non.d does show the holidays, and so it generates different trades sometimes. And Tick Pulse had a nice short trade going, Market ran up here, hit the stop, then rolled over, closed lower than that stop loss price. But we were up on the day near the lows, had some nice gains going. Thought we'd see some follow through. But it ended up being a choppy day, and these are the results on the day for Friday, March the 17th, 2023, minus 57.50 and minus 12.50. And once again, up on the week, we're able to turn it around on the week, up on the month, and add it to our gains on the year this week. And so we continue to work on syncing up with the market as it is in a bit of a change mode right now. We'll see if the Fed pivot continues. Some of our strategies are tuned for the Fed pivot type market action, or if this will all reverse and go back to increased interest rates and QT versus QE.
Hey, David Bean here. Welcome to Capstone Trading Systems YouTube page. Be sure to subscribe to join our community of algorithmic traders. We are real money traders. We share our winning streaks, we share our losing streaks, as well as market updates, strategies, and coding tips.